And we see another sell-off today in the Asia-Pacific area. Investors took cues from the weak U.S. closing last Friday, and oil stocks bore the brunt of the possible hike in output in an already oversupplied oil market. And in fact, the whole resources sector is taking a hit today. And we look at China, the mainland benchmark Shanghai Composite is trading right now down 0.5% to 2,886 points. And retracing some of the losses at the opening bell, which was down almost 2%. And the fourth quarter GDP is coming on Tuesday, and that crucial figure will set a new tone for the market sentiment. And now Wang Lihuan is joining us out of Shanghai to talk more about stocks. Lihuan, walk us through the trading actions this morning.
Good morning, Cheng. China's yuan firmed today as the central bank announced new moves to curb offshore speculation in the currency. That was good news for the markets, but still stocks opened sharply lower this morning after global markets slid. The indices then swung between gains and losses. The Shanghai Composite at one point fell below 2,850. That's the lowest level last August, and also an important psychological level. CSRC chief SHCOMP blamed immature markets and inexperienced investors for the latest meltdown over the weekend, and pledged to strengthen oversight of the markets. The remarks were widely read by investors, but that didn't seem to stabilize stocks today. The ChiNext board is the only bright spot this morning. The State Council approved Shanghai, Tianjin, and a dozen other cities to test cross-border e-commerce, boosting e-commerce concept stocks. Robotics and stocks related to charging station rallied as well. Shares of China Vanke was supposed to resume trading today, but the company said that restructuring is not completed and its shares will stay suspended until March 18th. Zhang.
And Lihuan, the markets have been tumbling since the new year. And in order to reassure investors, more listed companies are announcing their major shareholders won't sell shares. What's the latest there?
That's right. As of last Friday, there's been 137 announcements from 128 listed companies saying their controlling or major shareholder will not sell shares. Most of them are small and medium companies. Among the biggest companies are Zijin Mining, BYD, and Kangmei Pharmaceutical. And if we look at the time period of these self-imposed share sale bans, 70% of them said that share sale will be locked for 6 months. Some others said 1 year, and some companies didn't give a certain time frame. So this means that in July, we will be seeing a large batch of share sale ban that will come to an end. And let's say, however, promising a share sale ban doesn't mean that the company's share price is safe, though. Xiaqiang.
Thank you, Lihuan. Have a great week ahead. And that was Wang Lihuan joining us out of Shanghai for the stock market there. And